Hello everyone and welcome to the Dividend Enjoyer channel. Today we are going to be talking about Campbell Soup stock, ticker symbol CPB. If you want more stock analysis videos, I have a playlist on my channel. Also, please subscribe if you like this content. Thanks so much. Some facts about Campbell's. The Campbell Soup Company was founded in 1869 by Joseph Campbell and Abraham Anderson in Camden, New Jersey. The company started as a canning business that produced and sold preserves and canned fruits and vegetables. Fun fact, they are still in Camden, New Jersey. Campbell Soup Co. has increased its dividend annually since 2013. The company has a consistent history of dividend payments and is considered a dividend achiever. So it's not a dividend aristocrat. Campbell's offers more than 100 different soup varieties, from classics like chicken noodle to unique flavors like spicy chicken quesadilla. Let's look at the financials. As we can see on the right, Campbell's Soup has a market cap as of recording of 12.37 billion. This is on the lower end of stocks that we've reviewed. The PE ratio is 22.6 and the dividend yield is 3.76% annually. They have a 52-week high of $50.63 and a 52-week low of $37.94. The stock currently trades for $41.50. Sales revenue for 2024 is $9.6 billion. This is a 2.98% increase year over year from 2023. The stock is down 7.24% year to date. This is a lot lower than the S&P, obviously, and it kind of mimics some of the problems I see with the stock. Now, before we keep going, this is just my opinion, not financial advice, but I do not think anyone should be looking at the stock and wanting to jump in just because of the dividend and the history or because you like the stock, but do your own research. I just, throughout this video, just full transparency, I don't think Campbell's is a buy. It also has a 5-year dividend compound annual growth rate of 1.12%, which is not very good at all, actually. Here I had analyst opinions, as you can see. Most of them are in hold, but they're very mixed. It's very interesting because there's a lot of different factors that can affect Campbell's earnings. It's completely out of your control. And it's very hard, or difficult, I should say, to forecast what consumer sentiment is, what consumers are going to be buying at a higher percentage, what mix of products. When you have a company like Campbell's that doesn't just do soup, but also has V8 and some other products we're going to get into, like Pepperidge Farms, there's a lot of things to account for, and there's a lot of difficulties, whether that be commodities or a myriad of other things. The interest rates are not helping Campbell's. If they need anything from overseas, that's probably going to cost them more now, not to mention they're dealing with companies like Pepsi that have a lot more money to fight against them. It's a difficult business, and on top of that, you can also be sued, which is why I don't like companies like Campbell's or like airliners or like car companies that make a very similar product, don't have a monopoly in the market, and the market's extremely competitive. So, full disclosure, I'm just going to show why I think the stock is not quality. They do have a diverse product portfolio. I'm trying to remain unbiased, with many snacks and drinks included in their offerings. Demand for soup product is seasonal, with the fall and winter months usually accounting for the highest sales volume. Demand for our other products is generally evenly distributed throughout the year. This was from their 10K, that second line, or that second bullet point. And it makes sense for Campbell's to want to acquire other types of foods for growth because, like it says, the soup business is very cyclical or seasonal. So it's not like a Coca-Cola where that's a drink that you could drink any time of the year and it's an awesome product. A lot of soup companies tend to do better in the winter when people are cold and they kind of want there's nothing better than that nice, like, warm bowl of soup in the winter when you've been out in the cold for a long time. And it reflects in the sales. People are more likely to think about buying soup when it's cold out versus when it's warm out. I don't think a lot of people are thinking of getting soup in July unless they're specifically wanting to make a dish with that type of soup on the side. So Campbell's obviously knows this, and I think it's good that the management is aware that they need to acquire other companies like Pepperidge Farms, like Swanson, V8, Bolthouse Farms, Pace, Prego, like all these different things to kind of improve their brand. And here's their net sales. So as you can see, assuming this is correct, and I believe that the source is correct, I have double checked as well. But we don't have 2024 on here. But there seems to be a trend that the snacks are slowly coming up. And a lot of what I've read in interviews with the old CEO and just different parts of the company, it seems like they're trying to transition away from mainly having their sales be in soup. They want a more diversified company, but they still have the Campbell's name. But I didn't know that they owned like the Pepperidge Farms or any of the V8, or I didn't know they had such a large drink and snack presence. I thought they were just soups before I did this research. So I found this quite interesting, the fact that they have these different products. And then this is an excerpt from, or just a little thing I cut out from their 10K on the risk side, and it says we face significant competition in all our product categories, which may result in lower sales and margins. We operate in the highly competitive food and beverage industry, mainly in the North American market, and experience competition in all of our categories. The principal areas of competition are brand recognition, taste, nutritional value, price, promotion, innovation, shelf space, and customer service. And again, it says a number of our primary competitors are larger than us and have a substantial financial, marketing, and other resources. And some of our competitors may spend more aggressively on advertising and promotional activities than we do. So they're at a disadvantage in a very competitive market, which is not good because that's how you start losing market share. Attractive pricing, product placement, and visibility, securing new retailers, and maintaining or increasing shelf space for our products may also affect our ability to remain competitive. Even if we obtain our desired product visibility and shelf space, we may not achieve retailers' sales expectations, which could cause these retailers to reduce shelf space for our products. In addition, reduced barriers to entry and easier access to funding are creating new competition. A strong competitive response from one or more of these competitors to our marketplace efforts, or a continued shift towards private label offerings, particularly during periods of economic uncertainty or significant inflation, could result in us reducing prices and or increasing promotions, increasing marketing or other expenditures, each of which may result in lower sales and or margins. So it's a very delicate kind of tightrope, I guess, that they walk at Campbell's, because they have to spend the money on the marketing and other types of campaigns to raise awareness and keep their brand, because the brand is so valuable when it comes to food. It's Campbell's Soup is an iconic just brand that people think of. And that's where a lot of their value comes from, because there isn't really a lot of difference between their soup and the other soup. But if you have a Campbell's Soup and then a store brand soup and the difference is 10 cents, most people are going to choose the Campbell's Soup because the marketing is stronger. And I just think that Campbell's is in a really difficult situation because they also have to return value to shareholders, but they also have to keep themselves competitive in this very difficult place to operate. And it's just very difficult to understand exactly how much money you have to spend where, because the money is very kind of sparse. And if you don't spend it in the correct way, your company will be really punished in bad ways, because you missed out on either a growth opportunity or something happened that disrupted your business, and now you're set back from where you were a year ago. And then here's another thing. If our food products become adulterated or mislabeled, we might need to recall these items, and we may experience product liability claims and damage to our reputation. So this is just basically saying if the food gets damaged in some way or tampered with, or something happens across this giant logistical thing that happens with Campbell's Soup, and someone gets hurt, someone dies, someone suffers an injury, and they have a claim against them. This is a huge potential risk that I don't feel like is ever priced into stocks correctly, because I say this all the time in my stock videos. I do not want to invest in any airline companies or any car companies. And I know that sounds off topic, but the reason is because you also have that added chance that something could get recalled, that they messed up, and you could get sued, and you could lose a lot of money all at once that you weren't anticipating to lose, and it happens all the time. I think it's less common with Campbell's Soup because it's sealed products. They don't have a lot of products that will go bad on a shelf. So I don't think this is as bad of a problem as like a potential problem with their logistics or their supply chain or something like that. But this is a critical issue, and it's something that's kind of like a negative bonus every year. Like every year there's maybe like, I don't know, a 1 in 50 chance that a major outbreak of something or major mistake could happen for this Campbell's Soup brand, and then you're just liable to spend all this money. So that's definitely not an upside to the stock. Additionally, their CEO recently said that he's leaving to go be, I believe it was either GM or president of the Washington football team. Yeah, Washington football team, I think is what they're called now. But yeah, he's leaving. It's probably negative, but I don't think it'll affect the stock too heavily. I do think his leadership was good, but I think they needed someone else from the past CEO. I think the past CEO wasn't the problem. I think past CEO was more of a problem than Mark Klaus was the solution. But again, we'll see. I'm going to continue probably monitoring the stock, but I'm never, full disclosure, I don't own any. I've never owned any Campbell stock. And yeah, I mean, it's something you should think about because the industry is extremely similar and very competitive, especially in the beverage industry. And when I mean extremely similar, I mean the products are extremely similar. Sometimes there's a healthy spin on some, but when you look at food and beverages, there's literally every type of food and beverage you could possibly want. There is a flavor for it for the consumer. So it's just very difficult to have a product that's just a flagship and doing well and gaining market share still as an established product. So I've kind of given my thoughts already on Campbell stock, but I'll just reiterate everything. I don't think anyone should be buying into this. I don't think you can justify it when there's better companies out there. I think you'd be better off if you want to be in this industry, maybe looking at like a Pepsi or a Coca-Cola. I think you could buy an index and that would do better. I think this company is very much like playing the lottery because you're thinking about all the supply chain things. Everything has to go right for you to make money. And there's so many things out of your control, including the commodities it costs to make the cans, including if one of these products that they have underperforms, then you're going to lose money. If they fail to deliver on some deadline, you're going to lose money. If they don't implement technology correctly and they don't implement AI and someone else is, or someone's spending money on R&D to make their logistical system better and undercut Campbell's, you're going to lose money. So there's a lot of ways for you to lose money. They're not the leader in this industry. It's not an industry that is generating a lot of money. You're essentially, or it is an industry that generates a lot of money, but it's very competitive, very difficult to make money is what I should have said. I just misspoke. And I just don't want anyone to be buying into this and losing because it's not fun to lose money on a stock. And I don't think you should if you don't have to. those are kind of just my thoughts. I think this one's not for me. If you guys think differently, let me know. I would be happy. I would welcome someone to argue with me about this. But I think the stock is terrible. I don't think you should own it. I think you should look at something else that has better margins and is in a better competitive kind of situation. Thank you for watching so much. Please hit the subscribe button. Please hit the like button if you like the video. And check out the stock analysis playlist. Have a good one. Bye.